In the equity quadrant, on a day when equities were lower, we're taking a look at the June Russell 2000, which was the worst performer. And with a few hours left in the session, the Russell on the low was down 3.54% at 2027.90. Now, equities started higher at the beginning of the day, and in the Russell's case, it was up 0.65% at 2114. This is the worst single day performance on a percentage basis for the Russell 2000 since February 14th of this year. And the Russell is now working on its second consecutive down week since it made a new 2024 high on April 1st. As of right now, the Russell is still down over 2.75%, but there's still some time left in the future session. So it's unlikely to reverse to the positive. So it's going to be a pretty negative day. US CPI is the reason higher than US CPI pushed back a Fed rate cut in the market, hurting stocks. This is the third consecutive month of stronger CPI figures in the U.S. Headline year over year is now plus 3.5% from 3.2%. Core year over year is 3.8%, unchanged from last month, but higher than expected. Month over month, core and headline were both up 0.4%, unchanged from last month, but higher than expected. Even the Fed's supercore CPI is now at about plus 4.8% year over year. There were no huge jumps in any individual price metrics other than motor vehicle insurance, with many slight increases across the basket of goods causing CPI to rise. That caused Treasury yields to rise substantially after opening lower. They were down basically 1 basis point across the board. And then as we got in toward the end of the close today, the 2-year up 23 basis points on its yield. 5-year 24 basis points, 10-year 20 at 456. That's the highest level for the 10-year note yield since November of last year. Same thing for the 2-year at 497. 30-year was up 13 basis points at 463. So all of that weighed on the Russell as well.